Good evening, all. I'm Epstein, and here we are, Fed Day. Yes, it is November 1st, 2023, 6:20 p.m. Central Time, and we got it out of the way. All right. Did anything change? Not a thing. Did I have it right in my newsletter? On the money, all right? So what the Fed did is really simple. They acknowledged that market forces are moving rates higher. They acknowledge that wage increases have put wages now over inflation for the first time in a long time. They acknowledge that if inflation stays sticky or picks up, that they will turn right around and they will raise rates. They then went on to say stopping the raising of rates and then going up again does not mean that the Fed got it wrong. A pause is a pause, not a decline. Be one thing to cut the rate and another thing to have to come back and then start lifting it. So all those things came in there. Do I think the Fed is going to be Scrooge at Christmas time? Because that's always what comes up. No. All right. Now, we do get a couple of jobs reports between now and the December number. So I think that's important too, don't you? So we will see what the jobs market is looking like. The Fed acknowledges that it's tight. The Fed acknowledges also that wage increases as a whole, forget this union stuff that you're hitting because it is very important. But as a whole, it's up 2.7. Well, it was up minor amount. I take that back. 2.7% was the JOLTS turnover of jobs. So people that are getting jobs, number one, aren't jumping from them. Why? Because they're not being offered a lot more money. We will see more inflation. McDonald's, whether you know it or not, the first of the year, people that work there in California go to $20 an hour. I mean, it sounds like an awful lot. You're going to pay somebody to doing the burgers $3,000 a year, but living in California, that doesn't go that far. So it's all about where you live, what the market does, and we have to remember that. So tonight, the market euphoric a bit. The market did rally. I am not surprised. If you'll recall, when looking at the S&P, in my original reports, well, something I'll go about that in my financial update. Let's stick with the metals here. And in the gold, you got down, you fell back, you're losing the embedded readings. Okay, so should the gold go into a downtrend? Well, would you want to be short with every day there's more bombings going on in Gaza? You tell me. Do you want to go short with the idea that at any point you don't know who's going to jump into the war to defend the Palestinians? I don't want to go to bed that way. You might want to. I don't want to. So the answer is, I think that the smart money is going to say, okay, we got ahead of ourselves. The market's done everything. How many times can we keep discounting the same event over and over? That is what I think is going on, and why we saw some profit taking recently carry the market down about $30 from its peak in the 2020 area just recently, back down. But am I bearish? No. It's very difficult to want to be bearish gold in that environment. At the same time, the bonds and notes are losing their punch at this point. In other words, they're losing yield. As that happens, it'll work its way into the dollar, and you could see other currencies are going up. Now tomorrow, remember, you're going to wake up and we're going to get the Bank of England telling us what they're going to do. So for the gold market, even with the small setback, you're up for the week 0.21% so far. When we look at the action, it's the same that I have been saying to you day in and day out. The punch up off of the Hamas killings, and that's what they were, the massacre, the slaughter, is now in the market, and the market is sitting still. We don't know what this next phase will do. If you think you do, you're smarter than all the governments of the world. Everybody hopes it's contained to what it is. That doesn't mean to me that I have any idea if Israel's going to continue on in their campaign or not. But I'm looking over my left shoulder. What's Iran going to do? Are we going to get more problems from other players? We're already seeing in Yemen, they're firing at everybody they can. They just don't have the weaponry to get anything done. We'll see where this is all going to carry us. When you look at the gold, You've now got a pattern of lower highs, lower lows. So that could carry the market into the first support of the 200-day moving average of closes. My subscribers in the morning know that I told them, I said, I'm very scared about you buying a futures contract at that number. I said, you generally don't go anywhere in the first test of it, especially if it's close to the Bollinger Band. Well, in this case, they were right here. And if you look at where that market stopped right there, and you just come sideways, you see that it hasn't gone anywhere. If you were smart enough, it went up there and you caught the exact high, okay, you made a few bucks. But on the whole, you're just sort of sitting right here. And if you want to slip further, which you could if you lose the embedded reading, well, the question is the goal, and I can't answer that for you, by the way, is the goal the 200-day average or the combination of the 18 and 100? Behind the scenes, there's more bullish action happening. What? You just had a bullish crossover where the 18-day average got over the 100. That's important. That's a big support area if the market decides to go down and challenge it. In the gold-silver ratio, so far silver has not gained on the gold. It gets up, sort of flattens itself out, but it hasn't been able to meaningfully close under that red 18-day average of closes. In the silver market, you can see how the market stopped on the first challenge of the 100-day average in the Bollinger Band, just what I was talking about in gold. And from there, it's fallen back to the 18-day average, never did embed like gold, just playing a game. So I can see here, and I want to say that I think gold in the very short term can lose to the silver market right here. So I'd pay close attention to that. In the copper market, all the news that I keep getting out of China is still weakness in the economy. So somewhere along the line, President Xi and his boys are going to have to do something to get this to pick up. And in the market, we keep fighting a battle right now at the upper Bollinger Band, and you're overbought. I'm not seeing anything that I like at that point in time. In the platinum market, looking for a market to peak out again, the 100-day average in the Bollinger Band. Yeah, you got over it for 48 hours. Who cares? Now you've pulled right back. Are you going to embed? Are you going to stay overbought? It's got time to figure it out. It hasn't answered it yet. So you put this all together, you try to come up with game plans. In the dollar, here's what I see there. The game plan I had for you was, I thought you were caught in sideways action of the lower and upper Bollinger Band. You don't think that that's exactly what's the case here? You went from the upper band, ultimately to the lower band, back to the upper band, fighting at the 18-day average and back here. Will we get follow through tomorrow on that? I have my doubts. Market's at a big resistance point. I think it's easier for the foreign currencies to gain on the dollar right here. So I'd be very cautious with that. You know, that brings me to this for you. When we do things here, we try to make offers to you of so many of our different product lines. It could be courses like our pivot point courses. It could be the information, the charting software that we have, access to my market research. I don't know how many of you get that, but it's pretty interesting. I think it's good stuff. You see what I wrote tonight. I think it's good. Free access to the charting, as I said, the swing lines. You get all this type of stuff. How do you get it? Go to our website at iraepstein.com under free offers, or move your cursor up here and give it a click. I'm Ira. You have a great day. I'll talk to all my subscribers first thing in the morning because we'll probably have a lot of things to do, is my guess. You have a good day.